Hey, my name's Jake Nicholson. Welcome to my YouTube channel. In this video, I want to talk about some big drops with mortgage rates. Now, we've been talking mortgage rates a lot on this channel, and the Bank of England didn't cut. But since then, they have had interest rates, mortgage rates that you get have been dropping. Now, that's based off the forecast that in December, 80% of the market now believes that the Bank of England will cut rates. And your lender that you borrow from, you don't need to so much worry about the Bank of England rate because they get their money on something called the SONIA swap rate. That's been dropping recently, and that means lenders can cut rates to you, and that's what we've seen more recently. So in this video, I'm going to talk about a lender that's got a new rate of 2.49%. Yes, you heard that right, 2.49%. This is a cracking rate. The fees aren't too bad either. And these are rates that you can use in buy-to-lets and limited company buy-to-lets as well. So before we jump into this, if you're new around here and you haven't already, do make sure you subscribe to the channel over there and hit that bell notification. We've just hit 51,000 subscribers. And by subscribing, you'll get all the latest property news, house price news, interest rate news, buy-to-let investing tips, and much, much more. And before we jump into this, let's make sure we get some views on this. Your part in that is simple. All you need to do is smash like, tickle like, do something to that like button. That helps with the YouTube algorithm, and that really does help the channel grow. So thanks to everyone that does that. So we talk a lot about residential rates. I think it's good to know about buy-to-let rates, and these ones are with the Mortgage Works. Now, this is interesting if you have a buy-to-let, you want to buy a buy-to-let, or maybe you rent, because it's good to know, is the deals getting better for your landlord? Because that might stop your rent going up as fast as it has done in recent years. Now, Mortgage Works, they are one of the biggest buy-to-let lenders in the UK. They're actually part of Nationwide Group. So Nationwide Building Society, they have residential deals. Maybe you've got a bank account with them, a savings account of some sort, an ISA maybe. And they also own Virgin Money as well. They bought the Virgin Money brand. So this is the buy-to-let division. And Nationwide as a group, they've been very aggressive with mortgage rates over the last few years. And that's down to the fact that they're growing. They want to get as much market share as they can. And so the Mortgage Works has been really aggressive with pricing. A year or so ago, they started to be the cheapest lender, and that's what they're doing here. So let's have a look at some of these deals and see what that might mean for you. So they have just dropped a deal on a 1-year fixed, and that rate has dropped down to 2.49% with 2% fees, which is not bad. Now, you might not hear about 1-year deals very often, but if you're a person that feels that rates are going to drop, and let's face it, more people believe that now because there's a few reasons for that. One, inflation is starting to drop. We're back to 3.6% after being stuck at 3.8% for a long period of time. Unemployment's rising. That's not good. And that means the Bank of England needs to do something to stimulate the economy. And the GDP is not good. It looks like we could be in a recession at any time. It's surprising we haven't actually been in one at some point recently, but we've just avoided it narrowly each and every time. And so if you believe that the rates are going to drop, this could be an option for you. And basically, you're looking at 4.49% there, which isn't bad for a buy-to-let, and it means you can get out of that deal if you believe that the rates are going to be dropped in a year. So that's a good option for a lot of people. What about their 2-year deal? Where's that sitting? That's at 2.71%, and the fees on this are 3%. Now, that's not bad as well, because if you think about it, that fee is split over 2 years. So that 3% fee is only 1.5 really per year, isn't it? Put that on top of your 2.71%. So that's not a bad rate either. Again, if you feel it's going to be a little bit longer for those rates to come down to where you want, this could be a kind of deal that you get a bit more certainty short term, but not a bad rate either. And I think a lot of people would consider that. And what about the 5-year deal? That's a common deal as well. And so on the 5-year deal, it's higher, it's 3.67%, but the fees are 3%, and obviously that split over 5 years is significantly lower as well. So those are on buy-to-let properties in your personal name, but they also have some deals on limited company buy-to-lets as well, and that's how I would buy my deals now. So any new deals that I'm doing, I put into limited companies. I've got one for Georgia, I've got one for Amelie at the moment, and that's the way that I do that. And I think if you were to buy a new deal with a buy-to-let, I would recommend that you buy it in a limited company. In fact, we talk about that in our Property Accelerator program, which you can check out if you're interested. So, limited company deals. Now, there are less companies, less lenders that do limited company deals, so they're not as competitive. So they are a bit more expensive, but do take into account that if you have it in a limited company, you can write off a lot more expenses, including your mortgage interest. So if you have it in a limited company, they've got a 2-year deal, and that is at 4.79%, and the fees are an amount here, £1,495. £1,495. So that actually could compete with some of those deals where you've got the percentage. It depends if you've got a big mortgage or a small mortgage. If you've got a 50 grand mortgage, not so good. But if you've got a few hundred grand, this could actually be better. They've got a 5-year deal as well that's pretty competitive, and that's at 4.94%, £1,495 in fees as well. So that's a decent deal as well, because limited companies, there isn't lots of lenders that do this. I've got quite a few of my deals with a company called Landbay. I've got personal buy-to-lets with Mortgage Works, but Landbay was another option that I looked at, and these are better rates than I had about a year ago with Landbay. So they're moving in the right direction. Some good options there. 2.49 for a year is something that I think a few people would take if they feel the rates are going down. Let me know what you think about these rates in the comments below. Do smash like, and make sure you check out our Black Friday deal this week. That will teach you how to set yourself up as a property investor in 2026 and beyond. We're talking high cash flow strategies like serviced accommodation, HMOs. We're talking adding value and building equity. That's very important in this market with the buy, refurbish, refinance, rent strategy. And if you don't have deposits, you can start by controlling property, and that's a great way to do it using rent-to-rent strategies as well. At least check out the Black Friday offer. Lots of people have already enrolled in that. It's a one-time charge. In the first comment, you can find out all the details on that. Do also check out all the other content while you're here as well, including this video right here.